from the studios of Farm Journal Broadcast.
Coming up on Ag Day, looking at the financial health of the ag economy.
Well, there's not going to be enough demand over the next 2 years to eat up all the supplies. We have record stocks for both corn, soybeans, and wheat.
We'll hear from rural bankers about the stresses of 2017.
We had quite a few producers carry some grain over non-priced from 16 to 17, which is going to actually hit them a little bit maybe on their earnings this year.
And discuss strategies for the new year. Plus, meet a farm family using creativity to find new markets for their business.
Ag Day, presented by the Chevy Silverado. High-strength steel for high-strength dependability.
Hello and welcome to this New Year's Day special edition of Ag Day. I'm Clinton Griffiths. 2017 will finish as a challenging but relatively flat year for America's farm families. USDA's number crunchers say after 3 consecutive years of decline, farm sector profits are forecast to be relatively flat in 2017. Nationally, net farm income forecast to increase a little less than 3% from a year ago, and net cash farm income is forecast to increase nearly 4%. Those increases come mostly from livestock and cotton growers, while many of the other types of crop farmers saw declines this year. Some of those slumping sentiments are evident in the last Purdue CME Ag Barometer. The latest report from November showing the barometer dropping 7 points as producer optimism falls.
Producer sentiment peaked in January and has fallen back somewhat since then, but we retained some optimism that we didn't have before the election. So even though we've lost some of the optimism that we had right after the election, producer sentiment remains much stronger than it was prior to the November 2016 election.
Another gauge of farm country financial health, the Rural Main Street Index, also showing a sluggish rural economy. The latest RMI reading rose just a bit from last month, but remains below growth neutral. While the greater U.S. economy is heating up, the rural economy continues to sputter. Only 20% of rural bankers say their local economy is expanding, although that is an improvement from a year ago.
We don't see any significant upturn in defaults or delinquencies or bankruptcies. But that's because we asked the bankers why we're not seeing that, and they say we're restructuring the loans.
So where does 2017 leave the ag industry? Well, as Tyne Morgan reports, the road into 2018 may have its fair share of potholes to avoid.
Farmers like Joe Sherborne are facing a reality that's gripping the majority of agriculture today.
You know, corn, the price of corn seems to be still in that downward trend.
Lower prices that just don't seem to budge. It's something ag economists like Jackson Takish are watching closely, as 2018 may be more of the same.
I think we're going to have to sustain a few more years of the current economics. I think this year and 19, there's probably not enough to move the needle. There's not going to be enough demand over the next 2 years to eat up all the supplies. We have record stocks for both corn, soybeans, and wheat.
The Purdue and CME Ag Economy Barometer shows the slump in farmers' moods. After peaking at 153 to kick off 2017, farmers' sentiments slid nearly 30 points lower, remaining in that range to finish out the year.
As we wrap up the year 2017 and look back in agriculture, it was a year of continued adjustment. And when we talk about continued adjustment, I think everybody in U.S. agriculture knows we've been through a boom cycle followed by a moderation cycle.
Chris Hurt says despite net farm income projected to see a slight improvement in 2017, overall net farm income has dropped 40% from the highs farmers saw between 2011 and 2014.
As we go back top of the boom and look at the 2004 to 2010 years, those averaged about 75 billion. So even today, the low 60s is about 15% lower than the incomes we had for farm families back in the early part of the boom phase. We've also seen adjustments in 2017 in the animal industry. Once we brought feed prices down in 2014, at least the 2014 crop, we've seen very strong profitability for the animal sector, and of course that profitability has meant expansion of the livestock sector.
Even with a better picture for livestock, overall cash flows are tight.
So farm families have turned to their lenders, and they continued to do that in 2017 to help bridge the cash flow and income gap that we're seeing at this point.
He says the last major boom and bust cycle was the 1970s and 1980s, a time many in agriculture are trying to evaluate to help understand the situation today.
So in 1983, the farmer was spending about 35 cents for every dollar that they earned. Today, that number is 15 cents. And it's going to take a lot to get that number back up to a deadly level like we saw in the mid-80s.
Hurt says during the 1980s, it took about 6 years for prices and overall agriculture to recover.
So we're now the 14 crop, the 15 crop, the 16 crop, and of course now as we're through harvest of the 17 crop and marketing that, particularly for corn, soybeans, and other fall-produced crops, we're in our 4th year of downward adjustment.
He says it's possible agriculture is in year 4 of a 7-year cycle, meaning 2018 could help agriculture start to turn a corner.
We expect to see continued adjustments trying to drive down cost of production on the cropping side. We expect follow-through to expansion of the livestock numbers.
For farmers, prices may be out of their control, but changing aspects of their operation they can control is now becoming top of mind.
The business side, we know that's very difficult some days, but we just continue to look ahead, like our potential, our opportunities in the market, make sure we continue to reward. Yeah, we miss our opportunities at times, but we've got to continue to remind ourselves to take advantage of them and just continue to work on costs.
It's managing costs while working to become even more efficient on every acre that could help farmers survive another year. Reporting for AgDay, I'm Tyne Morgan.
All right, thanks, Tyne. Now, when we come back, we'll continue our look at 2017 farm finances with a panel discussion made up of ag bankers. And later, getting creative with farm financials. We'll meet an Idaho family finding profits outside of the box. Welcome back to AgDay. I've got a full panel of ag lenders. We don't like to say bankers. We'll say ag lenders here joining us to kind of talk about 2017 and looking ahead to 2018 from a financial perspective and what it means for folks as they get ready to kind of go through the books this winter, try to figure out what did we learn and what are we planning for in the year ahead. Introduce my guests real quick. Alan Hoskins, Keith Knutson, and Chris Floyd. Thank you all for being here. All right, Alan, let's start with you. Let's talk about 2017. What did you see last year?
Well, we saw 2017 end very well yield-wise. Earlier in the summer, we were kind of questioning where we were going to end up, but we saw arguably record yields. And there were some producers that took advantage of some pricing opportunities, not as many as would have liked.
Right.
But as a whole, 2017 seems to have ended pretty well. We'll know more as we get into balance sheets, as we get into year end, but that's at this point how it appears.
Yeah. Keith, what did you see? What struck you from 2017?
We were at a point when we had 2 months with not a drop of moisture that we were getting pretty critical the 1st of August and saw some great rains come in, and it was amazing how these hybrids were able to handle that, come back, and we didn't have record yields, but we had good yields, which really helped us out. So I think one of the things that we maybe saw a little bit of a negative is we had quite a few producers carry some grain over non-priced from 16 to 17, which is going to actually hit them a little bit maybe on their earnings this year, but overall positive about the year.
All right. And Chris, as you talk about 2017, what was your takeaway? Anything that struck you from a lender perspective?
For us, a lot of in our area, we had really good moisture, especially compared to several years ago. So our yields were fairly good. A lot of our farmers are readjusting. 2016 was pretty tough, and how to get their they're probably in the transition period of things they need to fix in their operation. And so I think 17 is going to be pretty positive. We had really good yields in this fall. So.
Well, I hear a lot of positives from you guys. So if we look at the financial picture, we're kind of ending this year with some indicators that maybe sentiments are down. People aren't quite as encouraged. But is there anything encouraging? What do you think about the balance sheet as we end 17? Going to be okay?
I think the balance sheets are going to end, obviously not as strong as some would like, but I think the balance sheets are going to end the year in a similar position, perhaps as what we saw in 2016, maybe a little bit better. Obviously, we don't know what effect that some of the coming tax changes might make. People make some buying decisions perhaps based upon any tax changes, but I think the balance sheets as a whole will look pretty decent.
Yeah, and Keith, some of that, you feel the same?
Not quite as positive. I mean, we've had a lot of producers that have gone through maybe 3 years of losses now. Not huge losses in most cases, but as they continue to burn through some working capital. We're going to see some producers that need to maybe restructure some of that back against other assets. So that's a bit of a challenge, but overall I think most producers holding things together at least.
Yeah, and real quick, what your thoughts?
Ours are pretty similar. I think they're, of course, with land values and equipment values makes things a challenge a little bit, but overall I think our producers have done pretty well adjusting, and so we're looking to be interested to see how the year ends up turned out when we get everything accounted for. So.
All right, well, stay with us, guys. We'll be right back. We're going to talk some more about 2018 and what to look at as we move forward. Hang with us. More AgDay in just a minute. Welcome back to AgDay. We've got our ag lenders joining us today, talking about 2018 now. Chris, as we look forward into 2018, what are you telling folks when they come into the office to say, hey, here's the things that we need to be watching for. How do I get prepared for next year?
A lot of times, for us, a lot of our farmers had some really good yields this year, and if they have a good year, to not let up the pressure of how well they manage their farm, how they manage their expenses, making sure they make the right purchases, and not get lax if they had a good year, and if they still kind of struggled, what things can they do to be proactive to make sure they be successful for next year?
Yeah, Keith, from your perspective, getting ready for 2018, what do you like to see?
What I hear from our lenders is our producers can always do a better job of taking advantage of marketing opportunities. Easy for us to say, we're not having to do it, right?
Right.
But I think if there are advantages, there are opportunities to take advantage of prices early. We should be looking at the 18 crop, for instance, and seeing if there are opportunities, because most of our producers are very close to break even at current prices. We just get a little bit of a move in the market. A lot of them can really, I think, have a good job in have a good year in 2018.
Good. Alan, as we talk about 2018, on the land side of this equation, are you expecting changes, maybe from cash rents, maybe it's from just land and land values?
Obviously, land values have trended down some, so it's reasonable to expect that, while none of us can predict it, with where commodity prices are right now, it's certainly hard to find much impetus to believe land will be moving up. I think it's also a great opportunity, Clinton, to have discussions about their cash rents and how they're interested in having the conversation with landlords if those cash rent contracts are expiring, and how they want to frame that discussion to understand where that cash rent is going to go.
Yeah, well, and it's all about, they've got to be able to stay in business to be able to even rent that land, right? As they get ready to stay in business in a new year, are you recommending changes in strategy, looking at other opportunities, diversifying? What kind of conversations are you having?
Yeah, we talked to a lot of our customers about adding cattle or changing your mix of the cattle used in the operation. Also different crop rotations. We've had a few people already do some really creative things with some crop rotations that haven't really been traditional to western Kansas and have been fairly successful. And so a lot of it is just be open to, and maybe you don't have to do the whole farm a certain way, but at least start trying some things at how I can generate more revenue, be more efficient in my operation.
Keith, what do you think?
What I hear from our lenders is as they sit down and start doing some cash flow analysis and break-even analysis, it's really determining from those break-even analysis not only on what they want to produce next year for crop, but also it gets back to even what they can afford to pay for cash rent. By taking the time to do that analysis, they can kind of determine almost a break-even cash rent. And to me, that's a really big issue for next year, is determining what that is, having that discussion with the landlord.
All right, we're going to talk about opportunities and what to look for as far as opportunities and maybe some challenges in this new year. We'll be back for more AgDay in just a minute. Welcome back to AgDay. We've got our ag lenders with us today. Let's talk about, Alan, some of the biggest, we don't want to say mistakes, but opportunities or missed opportunities that you've witnessed that some of our farmers and growers are making as they're trying to figure out the world that we live in right now.
I think one of the biggest missed opportunities is just sitting down and asking questions of their lenders, of their seed salesmen, of their crop insurance salesmen, and understanding that there are some perspectives out there When we have a sit down with a customer, honestly, they should be doing the majority of the talking. We should be doing the majority of listening. And I think that's the single biggest opportunity that I would say that maybe people have missed, is just the opportunity to maximize that value relationship with those service providers.
Yeah, kind of use some of their knowledge and have some benefit there. Chris, what do you think as far as some of the opportunities or mistakes or some of the things we're missing here?
Oh, as far as an opportunity, I think a lot of our customers, there's a lot of potential things they can do in their operation to change it. And sometimes they can become reluctant because, you know, we're all naturally don't like change. And so there's little different things where, you know, change your cost structure, change my rotation. I could partner with another farmer to help do some operations. There's a lot of things that are there that they can work on.
So some of the things to think outside the box. Keith, what's your thoughts, or maybe some advice as we move into this new year and what's likely to be kind of more of the same?
From the bank and the lender standpoint, I guess some of the best advice I could give producers is, if you don't really agree with the information you're getting from your lender or what their opinions are, it's kind of like going to the doctor. Get a second opinion.
Sure.
There's nothing wrong with that. And I realize banking relationships are built over a long period of time. But if it's about your operation, then you really owe it to yourself to maybe take a look and get a second opinion on whether they agree with your current lender.
All right. Well, I thank you all for being here and sharing your insights. I think it'll be very useful for the folks watching the show. And we'll be back to more AgDay in just a minute. Well, economists think agriculture is in a down cycle that could last another few years. Farmers may have to think outside the box, be nimble, and find new opportunities to make money both on and off the farm. Ty Morgan recently traveled to Idaho, where one producer is doing just that.
Good news.
Making quality hay is becoming an even bigger priority for Idaho farmer Kevin Johns.
We've always grown a little bit of hay, but again, because of the wheat markets, we've decided to go into hay a little more.
Over the last 3 years,
Beautiful hay. There's a lot of leaf in there.
he's diversified and ramped up production to cash in on a growing market.
I think that's how you're going to survive.
The Driscoll brothers are doing the same.
This year we're growing 3,500 acres from a previous 1,100 acres, so we put in a lot of hay this year.
It's Driscoll and other hay producers in the West cashing in on a demand boom for U.S. hay.
The hay crop's been really good. Been a really good hay crop. I've got a little bit of rain on the first crop, a little bit, and that hurt us a little bit, but the hay crop's doing well.
Rabobank says 7 states produce 18% of the U.S. hay supply, all located in the West. Those 7 states also account for nearly 90% of U.S. hay exports. But the largest hay producer, California, is seeing acreage disappear, declining 32% in less than 10 years.
California has suffered severely from drought over the last few years, and they've seen increased competition for water from permanent crops, such as tree nuts or tree fruit or vines.
While Williamson thinks it's unlikely those acres will ever grow hay again, it's Idaho producer Brock Driscoll blazing the path in finding new demand for U.S. hay.
We just started a new venture on that, and we're marketing into China through a hay press that we've gone into partners with some people from China.
Rabobank says as China's middle class grows a larger appetite for protein, the country can't produce enough hay domestically.
China's already a big buyer, and I believe that they will continue to be a large buyer going forward. Last year, they imported about 1.3 million tons of hay.
And it's that growing appetite bringing opportunities for more than just the Driscolls.
It still follows the American market a little bit, but it puts more pressure on it, so it should, increase to the hay producer what he gets.
Williamson says with more demand coming online each year, the upside potential for hay prices and producers is clear.
They've struggled over the last couple of years given falling milk prices, and the increased demand domestically and internationally due to increasing milk prices and this new restriction in Saudi Arabia will really help support prices going forward, and it'll help the industry as a whole continue to improve and progress.
An aerial view shows the progress being made in this open space of Idaho thanks to the Driscoll brothers and their willingness to think outside the farm. Reporting for Ag Day, I'm Tyne Morgan.
All right, thanks, Tyne, and thank you for spending some time with us this morning. That's all we have for today. For Tyne and all of us here at Ag Day, I'm Clinton Griffiths. Have a great year in farm country.